management of Muthoot with us now. The stock's trading at a near lifetime high. What's the outlook, particularly in light of the current trend we're seeing in gold? We've got Mr. Alexander with us. Mr. Alexander, thanks for joining us this morning. Now, the current liquidity has shifted focus on retail NBFCs like yours. Analysts seem to be quite upbeat on the growth potential there. How are you foreseeing growth now going ahead? What are some of the trends that you're observing?
The last quarter was quite good, and in April and May it was little flat in the sense the election time, etc. But soon after the elections, now the business has picked up, and we see a great pickup in the gold loan disbursals. So demand credit for gold loan is actually good now, and I think this quarter should look good, because although April was not that good, May and June is looking bright and prosperous for gold loan sector.
Sure. Mr. Alexander, talking about the core gold finance business, what's the AUM growth that you're targeting for FY20? Do you feel that it's going to be sustainable? Give us an insight into what you're factoring in with regards to that.
See, just the gold loan business, we ended last year with 33,500 crores of AUM, just the gold loan. It showed a 16% growth last year. We expect the same 16% or more growth this year, if things look good and if everything is normal. Unless otherwise there is some other disruption in the market, we should see something around 16 to 20% growth this year in the gold loan business, AUM growth.
Right. Also help us understand what then is the outlook on margins for FY20, and will you be passing on the interest rate cut which happened in the RBI policy to the customers while maintaining your margins?
Yeah, the interest rate cut is only on paper. We have not seen any interest rate cut. In fact, our borrowing rates has only gone up. The banks have not reduced the lending rates to NBFCs, and at least for us, they have not reduced any lending rates. Although they have not stopped lending, but they have actually increased the lending rates only. Even the NCD rates have actually gone up. So it is the effect of the cut in the rate has not translated or not come to NBFC. So we have not seen any rate cuts in our borrowing cost as of now.
Right. Also wanted to understand, given the rising funding cost environment, what would be your own future source of funds and where would they be coming in from? And also, how is it that you see your borrowing mix shape up, given NCDs, CP as well as MF markets are seeing a massive liquidity crunch?
We have actually a fairly distributed liquidity or resources mix. First of all, we have about of the 33,000 crores we have on gold loan, we have a 10,000 crores of net worth. We have 12,000 crores of bank borrowing, and about 7,000 crores of NCDs, and 4,000 crores of CP. That's the market today. So now we are now raised to two tranches of NCDs, a 700 crores and 1,000 crores, which the last one, 1,000 crores, was closed yesterday. We collected about 900 crores in that issue. So we are now focusing little more on retail NCDs. All these are retail NCDs, not corporate NCDs, and we have seen a good market response from our customers. We had a good retail franchisee for NCDs, which was not really used in the last 3-4 years. Now we have revived it, and I'm sure this year we should be raising about 5,000 crores in the NCD market itself.
Sure. Now in FY19, profit growth was slower than loan growth. Do you see this improving in FY20?
See, the loan growth, as I said earlier, the AUM growth should take about 15 to 20% for the gold loan business. As far as subsidiaries are concerned, put together, we should see about 20% growth in the loan book this year, the end of this 2020. Sorry.
Okay, and subsidiaries contribute about 12% to loan assets. Is that contribution rising? What's the outlook over the next couple of years?
See, we wanted the other verticals to do better than 11%. There's something happened in the home finance business vertical, etc. In fact, we have reduced our growth in the home finance sector. Last 4 or 5 months, we have not seen any growth, or rather, we have cut down our disbursements in the home loan sector, mainly because we are not able to identify good builders. See, the customers who take retail loan, it's only all their home loans are affordable sector. They are about 10 lakh, 11 lakh loans. These customers who go and take money from builders, if the builders are not able to complete the project, they are in problem. So we are now looking at more almost completed houses for financing our borrowers, so that the borrowers don't go into problem. That is why our last for 6 months we have not seen any real growth in our disbursements in the home finance. If that was also there, we would have increased our other than gold loan business. But now gold loan is now picking up. So all said and done, always our focus will be on gold loan, and gold loan we will do to the maximum possible, and then only we will go into the other verticals, because there is no business as good as gold loan, which from our experience, and our forte is also gold loan.
Right, fair point. Also wanted to understand, how is it that you viewed the revised RBI framework and its impact on the NBFC sector as a whole?
I think some of the NBFCs, if about the liquidity margins, liquidity reserves, etc., which we have to keep, I think it will have an impact on the little bit of idle funds being locked in government securities. Other than that, we don't see any big issue there. But as far as gold loans are concerned, our loans are actually self-liquidating and short tenure loans. So we don't see any liquidity issues other than having to keep some money as per the suggested RBI guidelines on the liquidity reserves, which we have to keep with banks or government securities.
Right. Also wanted to understand, at large, what are your expectations from the central bank? I know you reiterated that irrespective of the cuts, rate cuts, that is, the transmission in the system hasn't happened for 3 rate cuts now. And also your expectations from the government to try and improve the liquidity situation in the economy, and in particular with the NBFC sector.
I think bigger NBFCs with a large market cap, or not market cap, I should say, net worth, should be given some sort of RBI pipeline for emergency funding. Say about 10-15% of the net worth can be given by RBI if there is an issue in a large NBFC. So I think the large NBFCs are ones which require more money, and RBI can think of a policy where large NBFCs with maybe 5,000, 10,000 crores of net worth can be given a 10-15% maybe a pipeline funding in times of emergency.
Thank you so much for joining us, Mr. Alexander. Good to get a check from you on really how things are shaping up there. Thank you.
Thank you.